The main advantage of AIM VCTs is that the universe in which they can invest is known. And what you tend to get with AIM VCTs is pretty rapid investment into quite a wide range of underlying companies.
Clearly, this is a period where there's increasing complexity in the industry. There's more rules coming into an already complex system.
So what we really need to look at is what is the objective of the client. So the objective of the client, potentially for an AIM VCT, is to look at growth and regular dividends. And is the basket of companies that's underneath going to be able to deliver that? So it's really about sort of getting under the bonnet and looking at what's underneath and whether those companies will be able to help deliver that target.
So let's just wrap up with the advantages of a prospectus. You've got a higher standard of disclosure than you would have in a simple Section 21 approved financial promotion. It's all the information necessary to make that informed assessment of profits and losses, financial prospects, assets and liabilities, the rights attaching to the shares.
The weight and emphasis of a report, we tend to find sort of people put it into sort of three parts. You've got the actual obligations that you've got to do. There are parts in COBS 9.4 that say, look, these things need to be in a suitability report. You're then dealing with a real person, a client, so you want to make it interesting. And at the same time, you've got this compliance department that's saying, look, you've got to shove that in, you've got to shove this in.
People often say size matters, and I always think that's not true. But when it comes to VCTs, I think it is true to say that size is really important.
This year to the 31st of March 2015 was a record year for dividends in the sector. Nearly £240 million paid out this year, which was an all-time high.
In that year, 2004-2005, there was the 40% ultra tax boost, if you like. And lots of houses started looking at the market with a view to launching new funds and spoke to lots of investors and lots of advisors to understand what the concerns were in the market that would allow them to break into it. And the resounding majority, certainly the people that we spoke to back then, and I'm sure others did too, was the issue that's come up time and time again this morning, which is that of liquidity.
On the opening side, you see it there, it says constantly changing and challenging landscape. And quite frankly, thank God for that. I can't imagine working in an industry where things weren't changing all the time. I think it makes it interesting. The reality is also that changing and challenging landscape means that if you embrace it, it not only helps you best deal with your clients, but makes the best of the opportunities that do arise.